All righty.
Yeah, there he is, Barry Ritholtz, everybody. It is time to talk with the great Barry Ritholtz. It's been way too long, and shit's going crazy, and I wanted to get your perspective on all of it. How are you? How have you been? You've been doing a lot of work, a lot of good
Yeah, yeah.
casting, a lot of good podcasting.
Yeah, I've been really kind of busy. It was fun. I started chatting with Neil Katyal months ago,
About
and
tariffs, the legality of
yeah,
tariffs
and
there, and then
he's
you
like,
got
I'll be in New York August 27th. So we recorded the interview. Who the hell would imagine Friday, 5 o'clock before Labor Day weekend, the appeals court gives him a decisive 7-4 victory. And so that was really fun. The timing of that was just perfect.
the gives him meaning Neil Katyal.
Katyal won the case.
I didn't know that was his.
His clients won the case at the Court of International Trade, which is a U.S. court, part of the federal system. The appellate court over them is the second most powerful court in the country, the D.C. Court of Appeals. And they did the hearing en banc, meaning all 11 or 12 judges. I think one judge had to disqualify themselves. So it was 11 judges, and it was 7-4. That's a pretty resounding victory. There's nothing in the IEPA legislation that the president referenced that even mentions tariffs. This legislation has been around for decades. This is a very novel application. And Article 1, Section 8 of the Constitution says the right for duties, levies, and taxes, and obviously that implies tariffs, lay with Congress, not the executive branch. So in his first term, Trump asked for these sort of tariffs, and Congress said no. The mere fact that he didn't bother to ask and just did it anyway suggests he knew this wasn't legal, and he was daring Congress to challenge him. Instead, a group of small businesses challenged him, and so far they've won.
Yeah. What does that mean, though? I mean,
Well, now it goes to the Supreme Court, and the challenge the Supreme Court has is it's pretty obvious that this is a losing case for the president. If they, I think this is their last opportunity at retaining some credibility. So Neil would never say this because he's far more diplomatic than me. But, after a series of ridiculous Dred Scott, separate but equal like cases, for a long time, the Supreme Court's reputation was pretty good. Military and Supreme Court both got high marks. Supreme Court's reputation has plummeted because they've revealed themselves not only just corrupt in taking money from people and gifts and flights and taking from people who turned out to have cases business before the court, but they're just so obviously partisan. So somebody who's arguing in front of the court is never going to say something like that for obvious reasons. But I don't practice law anymore. I'm never going to be in front of the Supreme Court. So I could say, hey, Johnny Roberts, last chance to protect the institution that you're so proud of and are in the process of all but eliminating. Try not to screw this one up.
I don't think they'll ever be able to redeem their credibility, maybe a little credibility in that they might make this or that decision. But we don't need to quibble about that, because there are two cases that I would ask you about that are important. You're mentioning this case around the illegality of the tariffs, and that it's supposed to be Congress supposed to weigh in on that. Of course, that's one of their powers. That's the challenge there. But the other case, which is super important, seems to be what's going on with the Federal Reserve and whether or not the president can just remove Lisa Cook in this case. And I believe that the courts are going to have the final word on that. I think I read today that all of the currently living chairmen of the Fed sent a letter to the Supreme Court to say, please don't make this decision. And I think that decision, and if I have this right, would be that if the president's allowed to appoint whoever he wants or get rid of whoever he wants from the Federal Reserve Board, what that means is the Fed becomes very political and at the whims of a political leader. And we know what happens when that happens. We can see hyperinflation in breadlines in places like Venezuela and other places. So those are two big issues that I'm guessing you and people in your world are pretty focused on. Am I right to assume that? And is
absolutely. In fact, one of the fascinating things about the tariff case is it turns out that the Howard Lutnick, who is Commerce Secretary, under President Trump. His sons have set up a fund that are betting against tariffs. Essentially,
where do I invest?
they're saying, hey, if you want to, I just sent it to you. Hey, if you want to buy these refunds so everybody who's paid tariffs, if the case is struck down, about $200 billion gets returned to them. So, hey, let's offer 50 cents on the dollar, and we think it's a better than even chance we get it. And so you buy these paper for 30, 40 cents, and you get $1. So that's the company gets some surety, some cash now, and the speculators get a lot of upside if it gets tossed out. So Lutnick's sons don't seem to believe it's not going to hang around. The other case is really pretty simple, and they always try and make this stuff complicated.
Tariff case?
No, the Lisa Cook and the Federal Reserve case.
Yeah,
but by the way, the Supreme Court's already shit the bed 3 separate times with this. They've embarrassed themselves. You never want to have a situation where 93% of law professors say, yeah, this decision is just fucked. This is completely wrong. The Supreme Court is just talking out their ass. They don't know what they're talking about. They've said that with the tariffs, and various appointees who are not supposed to be political appointees, right? Your cabinet are political appointees. Various bureaucracies are supposed to be doing the people's work. We're not like the UK. We're not a parliamentary system where everybody leaves and then the new guys come in and then they lose and then those guys leave and the next set of new guys come in. You want some consistency at various places within the armed services, within the FDA, within all these other things that really matter. And so
CDC.
Right. So when the head of the FDA or the head of the BLS was fired, I don't know if BLS fits into this, but the head of the FDA, that's supposed to be a non-political appointment. And I would argue the BLS is also a non-political appointment. And the legislation that enables this, that Congress has passed, doesn't give the president the right to fire those people. What ends up happening is that the majority in Congress, who are fellow Republicans to the president, they don't want to rock the boat. They are very intimidated, very afraid of this president. And so they're the ones that have the ability to say, you can fire Lisa Cook at the Fed. You can fire the head of the FDA or the head of the BLS, but they're all terrified. So they're the ones that could bring a suit, but don't. Arguably, there are other people that have standing to bring a suit other than the people fired. But that raises like all sorts of quirky questions. Well, the Federal Reserve is absolutely 100% supposed to be independent.
So what are you realistically concerned about if it is no longer independent? If Trump is pulling the strings, or probably someone smarter than him in his administration, or someone dumber than him, one of his sons, and doing whatever he decides to do about interest rates and monetary policy, which is not supposed to be political. What are you thinking about? What are you telling investors? Like, is that not a 5-alarm fire? Is that not a break the glass and other metaphors for emergencies?
Not quite yet, but it potentially is. Let me give you 3 things from different eras. So the first one is during the 70s, Richard Nixon was able to put just by the coincidence of when the seat came up, was able to put people into the Fed who did his bidding and basically let inflation run amok. Presidents are always thinking about the next election. Fed chairmen, economists, people who look at this sort of thing, they're thinking about the long-term health of the economy. And so that was in the 1970s. Nixon unleashed a period of structural inflation that lasted a decade. And the only way we managed to get them under control was when Paul Volcker came in, cranked rates up to 20%. Can you imagine rates going up to 20%? Caused a recession, caused the economy to slow down, caused the market had already been wobbling, but inflation came all the way down. So that's the 70s era, which took a decade of super high inflation that was only ended with a painful recession. So think of the 1970s. The next issue was the pandemic. And in 2020, CARES Act 1, by the way, I supported CARES Act 1, 2, and 3. But CARES Act 1 under President Trump was the single biggest fiscal stimulus since World War II, since the Marshall Plan, rebuilding Europe. And at the time, I had interviewed Jeremy Siegel of Wharton, and he said, this is absolutely going to cause a massive spike in inflation. You just can't get this much money moving through the system without causing inflation. And it's exactly what happened. The ironic thing is Biden, who did CARES Act 3 and the infrastructure bill and the semiconductor bill, which contributed, got all the blame. But when you make a list of 10 individuals, institutions, factors that drove the most recent inflation spike, Trump skated because he was already out of office. But really, CARES Act 1 and 2, the first one was $1.8 trillion. The second one was about $800 billion. That's what kicked off the initial inflation.
Well, I don't know about the Nixon one. That sounded pretty political. But with Paul Volcker.
Oh, no, that's not political. That is like standard economic dogma. Everybody who looks at that era says, hey, Nixon had a very friendly Fed that did what he wanted, and the results were. Now, you also had the oil embargo. You had a lot of other things happening at once.
What the president wants sounds political. Forgive me.
But that's what was happening. He had
the problem. We can diagnose the problem with why it shouldn't be a political decision, and how that would affect the outcome of elections. But just real quick on all three of those, then certainly
those were two. I didn't give you the third.
You gave me COVID, Paul Volcker, and
that Paul Volcker was the 70s and 1980.
Oh.
The third one is what happens if the fourth seat opens up and President Trump gets an appointee. Right now, you have something unprecedented. You have his director of Council of Economic Advisors on a leave of absence sitting at the Fed. That is not a person who's looking at the economy and making the best decision for the economy. That's one of Trump's, cronies in the Fed making decisions as directed by Trump. It's not, I don't want Biden to do this. I don't want Obama to do this. I don't want Clinton to do this. You don't want any president to do this because presidents have a tendency to be focused on the next election.
You juice the economy right before the election.
Yeah, of course. And literally that's exactly what happened in 2020. The postmortem of that election is that the juicing of the economy took place before the inflation kicked in, but at the same time, the sun is coming out. At the same time, people were unhappy with how COVID was handled and ivermectin and bleach and all that nonsense. So despite a fairly robust recovery in the economy, they weren't happy. Most of the postmortems are, hey, had he done a slightly better job on COVID, he would have been reelected in 2020.
I agree with that.
And now someone else would be in there today. So, I mean, you can argue about that, but that's
all three of those. Well, then all three of those, though, weren't something that was done at the whim of the president, Democrat or Republican.
It was undue pressure by the president on the Federal Reserve, right? So in the 70s, you had Nixon with a very friendly appointee doing what he wanted. Then in 2020, you had this huge fiscal stimulus, which, by the way, is the purview of the president and Congress. Only the impact of the inflation wasn't felt for a year or two.
To be clear, all
That's
of those,
fiscal.
right? All of those were, well, the one you just cited was Congress.
Yes,
who are in charge of fiscal policy,
100%
for this stimulus, and as a result, inflation went up, and the Fed acted. Whether or not they acted right. That's.
But the irony of that is that Trump was probably, and we're just spitballing with percentages. You could blame Trump as much as you blame Biden. You can blame Congress as much as you blame either of those. You could blame companies. And I was skeptical of this in the beginning, but the data ended up supporting it. There was greedflation built into that because the mayhem of the pandemic and the supply chain snarling allowed a lot of companies to raise prices, even though their input costs hadn't gone up. So, and the data subsequently supported that. So many sources of that inflation. To me, it's just astonishing that Trump managed to skate away and not get any blame, even though you can't say he was the only reason. he should have been blamed. But then the reality is, hey, when the spike hit, Biden was president, and that's why voters blamed him.
The important thing should be that Congress passes laws, in this case, when it comes to stimulus or fiscal policy, that benefit the economy or that benefit
Supposed to.
the middle class, or that are fair
Again,
or evenly redistributed. Supposed to, right? But Democrats generally do that. Overwhelmingly, they do that. They also
Republicans used to do that. That used to be the case. That changed under Obama. In fact, I remember very vividly being at a dinner in 2010's post-financial crisis, and the fiscal stimulus following the GFC was punk. There was a temporary extension of unemployment insurance.
But the difference in what Republicans, sorry to interrupt you, but let's not do both sides a false equivalency, because
no, I'm saying it's not. It's not. This changed in the 2010s.
Let me finish. The theory, and I know you're going to agree with me, is this two Santas theory, where you give out benefits, a new prescription Part D in Medicare or something like that, or you give out a tax cut. The difference is that both parties do it, invest in the economy, but only one party will even have a conversation about raising taxes. So it's a false equivalency, because if you don't have a conversation about raising taxes, if that's not on the table, then you are not playing in good faith. And of course they don't, because they all sign a blood oath to Grover Norquist, which you know. That's all I was going to say about the difference between
which I'm in the middle of reading this wonderful
both
book.
Parties are happy to spend money and make their supporters and donors happy, but only one of them does it in a responsible way, and in a way that benefits the middle class in the last generation.
I think you're a little more generous to the Democrats than I would be. I think that as someone who grew up middle class, the Democrats of the 70s, 80s, 90s felt more focused on the middle class. The Republicans have, in some areas, pivoted in that way, or at least they've
Republicans, no, we're not doing it. You're wrong. I hate talking politics with you, because you bend over backwards. And
I try and be even-handed, and I try to avoid the false equivalence, which is why I bring up the 2010s, because in the 2010s, the Republican Congress said, hey, we want to cause a recession. We know what the playbook is after a financial crisis. We know what we did in 1929. We know what we did after World War II. We know what we did after 73, 74. There was a purposeful attempt to tank the economy, full stop. And when I said that in 10, 11, 12, I got the "you're crazy." I got a lot of pushback. And subsequently, people have, when Trump was in office and the economy crashed due to an externality, they spent the most money since World War II. So
watch this, everybody. Watch Ritholtz just be stunned into silence at my assertion that he will not have an answer to, which is why this is a false equivalency.
Go ahead.
There has been no policy proposed by Republicans at the congressional level. I would argue probably at the state level either, but at the federal congressional level, not one policy has been proposed, or much less passed, that would benefit the middle class. Not one.
What about the no tax on tips? Not that people who get paid cash tips are paying tax on it anyway, but isn't that something that benefits working class people?
I could argue absolutely that was a Democratic idea as well, and that it wasn't a Republican idea. The idea that they're looking out for people that make money on tips. But go ahead. Is there another one? Because that's
all I got.
Okay, because in our generation they haven't passed anything that would. By the way, no tax on tips.
It was different when I was younger. There was more of
great at for people who make money on tips, but that's not the vast majority of Americans.
Tiny. It's an insignificant.
If you want to pass a policy that actually affects middle class and working class folks, you would do something around insurance, employment, and education, and especially, most importantly, universal pre-K or paid leave. Obviously, healthcare. But look what we had. The fight we had to go to get this basically Mitt Romney idea, market-driven healthcare reform, which is Obamacare, which of course they called socialism and so on.
Right.
Getting back to the two issues that we talked about, tariffs and the Fed. Which
are a regressive tax on the lower earning people, because it's just a VAT tax. And, a lot of companies bought a lot of goods in advance. They front ran the tariffs. And so it looks like they ate them, but they really haven't. And if these tariffs are kept in, it's a big tax on earners, on
There's a
goods.
lot of different ways to look at it, but the one I'm kind of fascinated the most with, and you and I talked about this during Trump 1, is how the tariffs affect. We could pick anybody, but I want to pick agriculture and farms. Yesterday,
Farms are in trouble.
Trump's agriculture secretary, Brooke Rollins, came out and basically said that she'd be asking Congress for a stimulus for farmers. That's what I heard. They did this already. They did it in Trump 1.
Yeah,
It is the most horrific self-inflicted wound. And what could be more of a payout of a welfare? It's welfare for farmers. Farmers who, by the way, use resources from irrigation and water, fuel and fertilizer and equipment costs and labor to grow a crop that takes a whole season, and then they harvest it and they don't have a market to sell it to. And so they're not going to lose everything because we, taxpayers, are going to make them whole. But none of this had to happen. These farmers should have been able to sell their soybeans and corn and everything else that they're growing to the markets that have been buying them around the world. And that's what they want. They don't want taxpayers to bail them out. But is this not a bailout, Mr. Bailout Nation?
Yeah, of course it is. In fact, it's shocking when you look at how farmers vote. They voted for a person who told them, by the way, I'm going to put this policy in place that ain't going to be great for farmers. The American farm is in a lot of trouble this year. Their best hope is for the Supreme Court to interpret the Constitution intelligently and say, no, tariffs have to come. By the way, you control Congress, President Trump. If this is so important, go ask Congress to give you these tariff powers.
They would never do it. They would never do it because Republicans, well, maybe they would, but he's not going to risk it because Republicans are against this. This is against the conservative economic orthodoxy. Always has been until dear leader took over.
This is a tax hike. There's no other way to describe it. If you want tax increases, the question is, do you want it on the middle class and the poor? That's what this is. You know, if you're going to make the average car price cost $3,000, $4,000, $5,000, $6,000 more, who's paying that? If you're going out and buying a Porsche for $180,000, you don't give a shit. If you're buying a Camry for $21,000, $4,000 is a lot of money.
Right.
It's a big percentage of the cost of the car. So yeah, this is very problematic. There's no, I mean, this is pretty obvious. What's astonishing has been how successful the flood the zone approach has been, because it's just scandal after scandal after scandal. And one of his appointees takes a bag with $50,000 cash from the FBI and they dismiss it, and it just kind of goes by. No one pays attention.
Well,
so it's been very effective.
The biggest scandal that has gone undercover it was a New York Times front page story, but to me, the biggest scandal that we've maybe ever seen is the deal that the Trump
Saudi Arabia
and Lutniks made with the UAE.
Yeah, UAE, not Saudi Arabia. Yeah, that's just an absolute piece of graft. The worst scandal since Teapot Dome is how somebody put it.
And his family get a massive multi-billion-dollar investment into their money scam, right? Whatever that was.
Fund. It's a fund.
A fund, and UAE gets microchips.
Yeah.
For the president of the United States can't sell an industry or a company or a contract for an investment in their investment fund. I mean, remember how they screamed about Joe Biden and Hunter Biden? Like, this is the biggest
industrial policy, right?
But because of what you said, the flood zone and everything else that's happening.
Yeah, no, it's definitely, there's just a fire hose of shit, and it's hard to separate it. And, you know, the goal of propaganda has never been to get people to believe things that aren't true. The goal is always to make things so confusing and so unreliable that people don't know what to believe. And what happens when when people experience that? They just tune everything out. They're like, we're done. And so nobody is really upset. What's kind of shocking to me is one of the biggest scandals in this whole first 9 months of this presidency has been the FCC jawboning Colbert off the air and then threatening Disney ABC to get Kimmel off the air. And I'm shocked at how many people called Disney and said, hey, I need to cancel my Disney Plus and my Hulu because you're a bunch of cowards. And I can't send any money to you. And you know, the public's outrage is what put Kimmel back on the air. It's kind of fascinating.
The public's outrage, but I would argue it probably had to do with money. And the way I could see it, and I don't know if there's been any good reporting or data, the reason why the Jawbone worked is because Disney had a deal on the table that Trump's FCC had to approve of. And that was a multi-billion-dollar investment. But when they started losing so much money in their streaming, or it looked like they were going to,
right,
the future of entertainment, certainly of Disney, is streaming, not all these local television stations. So the long-term investment, the one that's going to prove to make them a lot more money, would be the future of technology, not the past, which is television networks. What do you think?
And yet, if you take a look at the chart over here that I just sent you, you still have 20% of the country blacked out from ABC, from the Kimmel show, which by the way, I know you know Kimmel, and I watched his first night back, and I thought he hit just the right notes. But look at that chart. That's unbelievable. The power of these local stations. When the FCC was originally set up, you couldn't have these networks of local stations. All the local stations were supposed to be independent, specifically to protect against this, right? And those rules all went out the window a couple of years ago, some of which were approved by Congress, but not all. The Telecommunications Modernization Act, I want to say that was 2000.
Well, one of the most fascinating people to listen to read, I'm sure you probably know her, certainly are familiar with her, was Lena Khan, who ran the Federal Trade Commission under Biden. And she's been so unbelievably outspoken and accurate about what you're talking about, the threat of consolidation of entire industries, the threat of antitrust and monopolies. And we're talking about in media markets. And if you own all of the media, that's how you get to the bad place, I think.
And now you have Larry Ellison, who is one of the wealthiest people in the world, made his money in databases with Oracle.
Yeah.
And they're pivoting into media, and they're buying Paramount, and they're buying HBO and theoretically CNN, and now they're going to be the back end database for TikTok. And suddenly a guy like, I don't care what his politics have been, but suddenly if he's controlling a third or a quarter of the media that's out there, his politics matter. Because look, you saw what happened with, when Bezos first bought the Washington Post, when the founder of Amazon first bought the Washington Post, my initial reaction was, oh, trophy purchase. Maybe he believes in democracy and he'll help them be better on the digital side, and it'll be great. But it turned out that he bent at the knee like everybody else. Cliff Asness said something that I loved. He was in an argument with somebody, maybe it was Bill Ackman, but he's a billionaire. He's arguing with another billionaire who was kissing Trump's butt. I can't remember which one it was. But Asness said, and this is why I love Cliff, he's like, hey, you know what's the best reason to have a little extra scratch? So that you don't have to kiss anybody's ass. And when you have a billionaire talking like that, it's like, oh, that's pretty solid. That's one of the reasons why you like a guy like that, who's totally independent and doesn't, get caught up in all the nonsensical politics. But hey, who knows?
Well, who knows is a good place to pivot, because that is the issue that we all have, certainly in economics and finance, the uncertainty, which is why I wanted to ask you the big question I know I wanted to ask you, which is, why are investment markets on fire when all signs are that the economy is slowing and there is no sign on the horizon that things are going to get better? People are real confused. My dad, however, read your book. And he argues that you're the smartest person in the world on this. And I told him, please don't let him know that you think. And he said,
I wish my mom was still around. She would have loved hearing that.
He said yesterday, as he was looking at his investment portfolio and grumbling, he said, if only I had read Ritholtz's book before, the whole book could be just buy the index fund. Stop fucking around, stupid. So he's a big fan of the book. There it is, everybody. How Not to Invest. And my question to you is, how come the markets are on fire when everything about the economy is pointing in the wrong direction.
Well, first of all, everything isn't, but I'll give you a prior example, and then we'll bring the example forward to today.
I was going to ask you to do that.
So in 2020, during the beginning of the pandemic, the market fell about 34% across 6 weeks from the middle of February till the end of March. Then the market bottomed and it took off. By the end of the year, it was 69% higher than it was in the March lows. And throughout that spring and summer, all I got were emails from people who said, everywhere I look, I see stores closing, I see local people closing, I see people having trouble making payments. It's a disaster. How is the stock market going up? And so I asked, what do you see closing? Well, I see, the airlines are in trouble, the hotels are in trouble, any of the entertainment, casino. So I put together a list of all those companies. You add them all up, and they turn out to be 5-6% of the S&P 500. When you look at the top 10 companies, they're 40% of the S&P 500. So the world we live in is an equal weight world, meaning you drive by a store, it's closed. You drive by a restaurant, it's closed. Oh, you order a computer, they're open, they're shipping. But those things are very different structure, very different weight within the S&P 500. And so if all of those companies disappeared, it would barely have made a dent into the index. Now, fast forward to today, and let's talk about the cross currents that we see. I wrote something on, was that Monday? On the 23rd. Yeah, on Tuesday, detached from reality? No. So what we're seeing is not stuff turning negative, but decelerating. So I'll give you 3 examples. First, jobless claims rose sharply last week to a 4-year high. Weekly jobless claims were 263,000, up from 236. They came back down this week, but it doesn't matter. That was the worst print in 4 years. Unemployment was a very low 3.4% in April of 2023. 2.5 years later, it's up to 4.3%, which is the post-pandemic high, but historically still pretty low. Anything under 5% is considered really good. The non-farm payroll that we got last month in August that Trump had a hissy fit over was only 22,000. So what we're seeing is the labor market is slowing down, but people aren't getting laid off. They're not getting fired. That might change in the coming months, but so far it hasn't gotten bad. Maybe it gets worse. We don't know. At the same time, we see the S&P 500. The earnings and the revenues are at or near record highs. The prices are near record highs. Gold is at a record high. Keep in mind, and I think people forget about this, for the past 15 years, the U.S. economy and stock market have wildly outperformed Europe and Asia.
Oh,
right? Wildly, both the economy and the stock market. But the S&P 500 gets almost half, about 41% of its revenue from overseas. So even if the U.S. slows down, so we were at 3.5%, 4% growth. Let's say we slow down to 1.5%, 2%. But Europe accelerates. Net, the impact on the S&P 500 is the same because almost half of their business for the 500 biggest companies in the U.S. come from Europe, come from Asia, come from overseas. So even now, if the U.S. tips into a recession, and not a mild recession, but a significant contraction with layoffs and economic slowdowns and all that stuff, hey, then the market is going to stumble. There's no doubt about it. Right now, there's a range of outcomes, and the middle outcome, so a good outcome is we reaccelerate. There are a couple of rate cuts. The market likes that. It stimulates housing. It stimulates consumer spending, and things get better. That's one spectrum. The other end, hey, we continue to see softening labor market, softening sentiment, worse consumer spending, and then the U.S. tips into a mild recession or even a moderate recession. That's the bad scenario. The middle scenario is we decelerate. So we're going 75 miles an hour now. We slow down to 25 miles an hour. But we're not in reverse. We're just slowing down. We're still going forward, but at a slower pace. That's the middle scenario. And that's the best explanation for why we might end up not having a recession or a big market crash. And whenever someone says to me, all right, of those three options, a recession, a deceleration, a reacceleration, which do you think is going to happen? And my answer is always the same. I have no idea.
Right. Well,
any one of those things are pretty, it's not like this is the base case scenario and then we have this tiny little thing. All of those things are very probable. And so that's why the Fed says we're data dependent. We have to keep watching the economic data, and that'll tell us how much we need to cut rates or not.
Well, we'll see if that's how the Fed makes such decisions, going back to our earlier conversation about it being.
Or do they just want to goose the economy and let the chips fall where they may?
You mentioned a couple of different economic indicators, of course, unemployment, job losses, and so on. But one thing you didn't mention is inflation, and specifically energy prices. Also, always love to talk with you about the housing market, which is, I guess, still pretty regional, you could argue, but interest rates on homes and who's buying and where. But just starting with energy prices, see the headline over at CBS News. It's me, Dan Rather. This is CBS News. The headline is the cost to heat your home this winter is expected to increase 7.6% is one figure, according to the National Energy Assistance Directors Association. I don't know if you like them. So
I don't care about the forecast because anybody can say any number they want. I don't care what you're expecting it to increase. Let's look at what happened. Inflation ticked higher in August. We're about 2.8% up from 2.4%. So, we had inflation fall, and now we're back down to a relatively low level, relatively elevated level. Anything under 3% is fine. The problem is the sudden uptick. And by the way, tariffs are a factor. Tariffs are going to cause more inflation.
Okay, so we don't know about energy. Wait and see on that. What about housing?
So housing has been frozen because so many people have so much money. Golden handcuffs of something like about half the homes in America have a mortgage. Of those, a huge percentage are paying less than 3%, 4% for their mortgage. The thought process is once the Fed gets mortgage rates down from, they're a little over 6% now, under 5%, that kicks up a whole run of people putting housing on the market. What the pandemic did was have all these people buy second homes out of the city without selling a first home, and it really mopped up just an incredible amount of
not just supply. One city, cities all over the country.
Every city, all over the country. It's really been kind of amazing to see what was going on with that. So until we actually get some sort of, either we build 3-4 million new homes, or until all these people have mortgage rates so low. Think about it. You buy a house for $500 million with a 4% mortgage. Now you have another kid. You want to move to a house with 4 bedrooms, 2 baths. Not only is that a much more expensive house, but at the same time, your mortgage rates were 6.5%, 7%. So it's one thing to go from $1,500 to $2,000 a month. It's something else to go from $1,500 to $5,000 a month. But that's kind of what that sort of number does to people.
Starbucks is closing more stores and laying off 900 workers. That's not a canary in the coal mine.
I think Starbucks. So I used to go to Starbucks all the time, and I kind of got bored of them. So they've been around a long time. It could be company specific. So what I like to look at is how is Walmart and Target doing relative to dollar stores and Dollar General. And when you see the crappier stores getting busier, that's telling you people are under a little bit of stress. It definitely makes a difference.
What about? I wanted to ask you, because we love talking about climate and energy and sustainability with you. You're a big renewable energy guy. You're very interested, obviously, in cars. What about the overall disinvestment in renewable energy companies, which one might argue is one of the main future growth places for the American, for every economy, the future of energy? And we are actually incentivizing and disinvesting in American companies. Yesterday or 2 days ago at the UN, our Mad King criticized all these countries who are investing in renewable energy. China being the leading one, also committed, by the way, to lowering their emissions for the first time ever by like 7%. Regardless, what do you make of the disinvestment in this country in renewable energy and the canceling of contracts that were already like half done or more, like that wind farm up the coast of Rhode Island, which apparently a court said could continue? But what do you make of all that?
The president has decided that global warming is a hoax, and we're going to let China run away with all the alternative fuels, with
Would seem to be
wind, with solar, and with EVs. We're going to just cede that CEDE. We're going to give up whatever we hope to do in that space and let China win that, which is, kind of horrifying. There's no rhyme or reason there's no thought process. I mean, obviously, we all know that Tylenol causes autism, but other than that, how do you, when you have a president who has these beliefs that are indefensible, but has the authority to put them into play? Now, I really don't think a lot of people are going to stop using Tylenol.
They're going to stop buying EVs without that rebate, or maybe they won't. Maybe
EVs have been suffering. So the problem with EVs are they're not quite ready for prime time. They're great for local, but like if you want to, like I have a trip coming up to Newport. It's about 4.5 hours. And I want to say it's about 400 miles. I'm going to take a gasoline car because I don't want to think about, wait, I got to stop here for a half hour and charge up.
Yeah, so, I wouldn't want to inconvenience you for 30 minutes.
No, I don't want to inconvenience because it's a long trip. And
I'll make fun of you for making that choice, but your larger point
is not just me. It's a lot of people. When you look at how much money...
Most people are not good people like you, and they're not going.
No, it's not that at all. When you look at the Ford F-150s, if you look at all of the companies, so Toyota, it very brilliantly said, we think the future is hybrid, not EVs, and their whole lineup, or every single car from the RAV4 to the Camry to their pickups, they're all hybrids because, hey, there's zero range anxiety. My wife's hybrid daily driver, I get like 80 miles a gallon in that, and it's a 600 horsepower monster. So if I want to put the hammer down and drive like a lunatic, that car has the ability. But if I'm driving anywhere around town, I'm on electric. And so Toyota figured that out. When you look at the used prices of EVs, they plummet because replacing a whole battery system is expensive. Like there are a lot of specific problems.
But I hear you. But those BYD cars in China, the speed at which they charge and the distance which they go. Also, Lucid apparently has a car that just went 750 miles on a single charge.
Mercedes has a 1,000-mile car coming.
Well, I'm not sure how far we are away, but putting the EVs
less than 5. Let's say it's 5 years. So for 5 years, we're going to be in limbo.
What do you say okay, so you're saying it's not just that the rebate's going away, but the fact that the tax credit is going away. What do you say about that?
I think it's a really dumb decision. I
mean, what do you say about the rest of renewable energy, from wind to obviously solar, which is now cost competitive?
Not cost competitive. Solar is the cheapest energy source there is.
There you go. People are using, I don't know if you've heard about Bill McKibben's new book and the latest research, but people now in Europe and across the world are putting solar panels on their rental apartment balconies.
That's unbelievable. It makes perfect sense. Not only that, not only
homeowners who have resources to afford or lease. Right. Now, if you're a renter in an apartment, you can supply your home energy, or at least some part of it, with a panel. Sorry, go ahead.
One of my neighbors where I used to live put in geothermal, so he's got heating year round. Oh. Another neighbor over here has solar on his pool. It costs him nothing to heat his pool. It's kind of crazy. Like the technology is there. It may not be perfect. It may not be, 100% done, but it's pretty close. And to just say this is a hoax, we want nothing to do with it, you're ignoring market forces. You're ignoring what people want. I suspect the mandate for 2035, no more gasoline engines, or 2030. I suspect that's going to go away in Europe and probably here. Maybe it gets pushed out to 2040 or 2050. But you know,
They won't need to mandate. There won't need to be a mandate if the future of EVs is so much more affordable and the range anxiety is gone.
I think we're still a couple of years away
A
from.
couple of years is not bad. All right.
But it's not 25 years. It's more like,
Yeah.
3, 5, 7 years.
And it depends on what country you live in.
There was just a big breakthrough in cellulose lithium. The more expensive, heavier battery, that they came up with a way to make it cheaper and better. I'll find the article. But the technology is moving rapidly in the right direction.
What do you think of these sodium ion batteries?
That's what it is. It's sodium ion, not
those are, I mean, that
lithium is the most attractive, is the best one.
that's a rare earth metal. Sodium is
Right.
sand.
Right. So sodium is if this technology does what the Chinese company said it does, this is potentially a game changer. But it takes a couple of years for that technology to populate out until the entire thing. It's kind of hard to understand why the president is against it, other than grandpa is shaking his fist.
It's not hard to understand. It's literally personal. It's not
Why?
even the special money of polluters. It's personal because he hates wind because of his Scotland golf course. And he has a particular vengeance against that. Also, he thinks it's popular politically. And he honestly doesn't think it's like masculine or some shit. It's not. And obviously he gets a lot of money and influence from the oil and gas industry and even the coal industry, which of course he's tried to prop up and humiliated himself with. All right.
Coal is done. Hey, man, as always, this is a lot of fun. I hope we didn't bore people too much.
We learned a lot. Thank you very much for joining us, Barry Ritholtz.
My pleasure. I will see you soon.
Thank you. You can leave. I'll say goodbye. Hit that red button.
I don't have to wait until leave studio.
No, you can just go.
Leave it.
We'll miss you. Oh, there he goes. He's gone. Okay. Never boring. That's right, Tina. Thanks everybody for watching live. Right now, 166 people across the platforms. Please subscribe on Substack and YouTube. And if you like what you see, it'd be awesome if you paid me for it. I'm a one-man band. It's just me. My credibility lies in the guests that I'm able to get on the show. That's it. And there's other good things too. Join our community. We've got a hangout tonight. Patreon.com/PeteDominic. We usually have like 50 to 70 amazing people. We have a great time, great talk. Never know who's going to show up. Patreon.com/PeteDominic. Oh, I'm getting so good at fucking marketing. I'm getting so good at plugging. I'm like, and what I mean by I'm getting good at it, I'm like, I'm having a little less shame about doing it, because when I'm seeing people that aren't doing, frankly, as good of work as me and doing it for the wrong reasons and covered with advertisements on their shows, I have no ads. It gives me a little bit more confidence and boldness to plug my shit. So thank you very much for joining and for supporting. And I'll be back right here, wherever you're watching, same channels, same back channels, with David Rothkopf in 6 minutes. That's right. A 2-for today. Or is it a 2-fer? David Rothkopf join. Yeah, I'm not funded by any Russians or any foreign countries. I'm not performing at the Saudi Arabian Comedy Festival. But for a price, I hope you saw Mark Maron's bit about that. It's very funny. Okay, that's it. I'll be right back with David Rothkopf. So stay tuned. There's no commercials. Just stay here. And I'll come back and maybe I'll change my shirt. I think I'm going to change my shirt because I want people to think I did it on different days, but only you guys will know. Okay, bye.